On happy Tuesday morning, February 13th. We are live now on the backside of CPI. We've got actually some decent moves to the downside. Let me pull up futures here and take a peek. If we jump over to let's go to an hourly chart, you can see that we just got CPI like about 45 minutes ago. And the reaction to CPI was not good. We have dumped to the downside. We're down over 1% on the S&P in pre-market, which is pretty impressive. We haven't had one of these days, I feel like, in a while. Where we've been down this much in pre-market. The reaction to CPI has been one of the larger reactions that we've seen in a while as well. Now, why was that the case? Well, let's see if I can pull it up. We had, I believe, CPI come in hotter than expected. If you jump over here, so let me just pop this up a little bit larger so we can see. We had CPI month over month, January, actual came in at 0.3 versus 0.3 previous. The expectation was 0.2%. Year over year came in at 3.1 versus a 3.4 last month. However, the estimate was actually 2.9. So we came in at 3.1. The estimate was 2.9 for year over year CPI. Again, still kind of hovering about 1% higher than where the Fed wants things. Core CPI came in 0.4 month over month versus last month being 0.3. Estimate this month was 0.3. Core CPI came in at 3.9. Estimate was 3.7. So core CPI running higher than expected, and I guess headline CPI as well running hotter than expected. That's not the best. Strong results anticipated, which may pose challenges for the Federal Reserve. Again, all this I think really means is that you're going to have, again, the trend of the past couple of weeks towards less cuts and this, that, or not less, I don't want to say less cuts because who knows what the overall landscape is going to be, but to delaying when the cut occurs, the first cut, that is just reiterated yet again, it seems like here. So that is essentially what we've got on our plate to start the day. If I jump over to the current projections for rate hikes, let's see what this looks like, or rate cuts, I should say. Let's see what this looks like. Give it a second to load up. Maybe everyone's jamming this page, so maybe it's not going to load up. We'll see. But 36 days, so a little over a month until the next meeting. It looks as if the March meeting, there is a 95.5% chance the Fed is not going to cut rates. Remember how crazy that has gotten pushed? That was 50-50 like a month ago. And now it's like, yeah, it's not happening. So, yeah, go back a month ago. It was actually a 76.9% chance right here that the Fed was going to cut by 25 basis points in March. That is completely flipped, and now it's like it's not happening at all. May is where we have more of a split, but to be honest, but this data, it looks like May is starting to get a little more interesting too, because May, now there's a 63.1% chance that we don't even get a cut in May. Okay, a 35% chance that we do get a cut in May. If you were to go back one day ago, there was a 52% chance we were going to get a cut in May and a 39% chance that we were going to get no cuts in May. So again, that continues to swing more and more towards the Fed not going to be cutting until potentially now May or June. I think June maybe is more where the consensus is at now. So that's just what we got. Whether that's good, bad for the market, we'll see. Obviously, so far, it doesn't seem to be good. Market's reacting negatively, but it doesn't mean that it's going to stay that way. So we'll see how it goes, and we'll see how or what charts set up. The problem that I have, well, I'm going to have later today, I'm not sure if I'm going to combine them or not. There will be some trade recaps that I'll post up, and those trade recaps should be pretty decent, like in terms of the trades we had on. I believe I made a recap for the Dow trade. I will have a recap for the NASDAQ trade and for Bitcoin, which both of them were good trades. They worked out. The NASDAQ trade literally hit, like, I kid you not, like a few points on the NASDAQ, which NASDAQ's like 18,000, whatever it's at, a few points below. So like a hair below my target. And then I was driving yesterday, so I popped it open, and I was like, ah, shit. And I saw the upper wick literally come like inches away. And then I was like, well, I got to close it out because I'm not holding through CPI. So almost at my ultimate targets, but just shy of it, but still made money on the play. I locked some gains in on Friday just to lock some in, partial profits, scale out. And then the Bitcoin trade went above and beyond my expectations, which is awesome. And that was fully out, I believe, I want to say yesterday as well. I think that hit my targets because Bitcoin yesterday, right, was over 50K. Yeah, hit yesterday. Yeah, yesterday was that final push, and my ultimate targets got taken out. I pretty much put my final sell. I scaled out. My final sell came like right around not all-time highs, the prior high that we saw back here. So it was like 49 something and change, and that's where I put it. So that worked. And now we're pulling back today. Did that? Who knows? The thing is, like, you could hold. Oh, you should hold it through because we're gonna go to 50, 60, 70K. I'm not playing that way. It's a trade. The trade really was the breakout of this consolidation, which was right here, and that was just a monster, just a straight up monster. And I love when we get moves like that. And so I'm gonna lock the gains in, and we'll look for the next one at some point, and we will, reconvene. So. Hope everyone is having a nice Tuesday so far, and let's get into it. What's going on, Millen? Hope you guys are as excited as I am for this fine week. Now, we have, interestingly enough, CPI. Tomorrow, not much. Some Fed speakers, and shouldn't be a big deal. Goolsby is speaking at 9:30, which, of course, 9:30 at the market open. Maybe there's something there, just, little cautiousness. Thursday, a lot of data is coming out. A lot of data. It's not like all massive data, like CPI moves us more than this, but this is all this could, get the market going, and that's all coming in early in the day. And then on Friday, you've got housing starts, building permits, PPI. PPI comes in. So, and consumer sentiment, which also moved the markets, briefly at 10 a.m. So just keep that in mind. It's gonna be an interesting week, I think, for sure. And the question is how does this react? So my view is that I'm absolutely not going to be interested in doing anything at the beginning of the first 15 minutes. Not a chance in hell. The better setups may come later in the day. And what I'm thinking is that if we are going to get continuation to the downside, then I would want, honestly, even a half hour or even an hour or so of consolidation, or, push down initially, consolidate a little bit, stay weak, and then those are the downside breaks to maybe be looking at for a short, maybe. The problem is, for me, I'm not someone who likes to, I long momentum and short momentum. So even though, yes, we are down, we're down like one day, you know what I mean? Like one or barely even 2 days. That's not a lot of data. That's not a lot of time for me to say, okay, we're trending down. We've got downside momentum on the bigger time frames to support a shorter time frame trade. Like that's what I need to trade. So if I don't see that, it's just, maybe there's nothing to do today, and that's fine. But as the week goes on, there may be better opportunities because I just need to see some things set up in a better way for me. Maybe for other people, this is an amazing day to trade. The only thing I was thinking about was if there is a short opportunity, I think Tesla would be one to be looking heavily considering, because it has been one of the weaker stocks. You jump on the bigger time frames. Nvidia, you're going to short Nvidia? Yeah, I mean, the thing can come crashing down at some point, but it's been so strong. I'm not going to short that. I would need to see lower highs on the daily chart for me to short Nvidia, so that's not going to happen. Amazon, same thing, very, very strong. Need to see lower highs on the daily chart. We don't have that. Yeah, there's a gap fill. Maybe there's, there could be a short opportunity in there. I can see that. But I don't know if I would be interested in that. Google, same thing, right? You have just general strength, right? So I'm yeah, maybe, you've got a lower high here now setting up, and we could be looking okay, but it's still within the bounds of the uptrend for sure. Microsoft, same thing, been very, very strong. So all these have been very, very strong, which is what's really interesting. Now, the Russell getting obliterated here. This had a very strong bounce off the lows of 190. It bounced 190, shot to 203, maybe almost 203.50 yesterday. And now in pre-market today, the Russell was down 3.26%. Just talk about, like we were saying, how this has been so weak and whatever. Absolutely obliterating in pre-market. I mean, relatively speaking, compared to everything else. Like, the Russell's down 3.5 almost percent, where SPY in the pre-market's down 1.25. The Dow's down 0.85, and the Qs are down 1.8. That's like, the Russell being down 3.25 is a lot. That's a lot. But again, like even this chart, right? You'd think, Russell could be good for shorts. Well, I would want to see it under 190 to be looking to short. So it's not there. Qs, no, I just closed out of a long on the NASDAQ, so I'm not going to be shorting this just yet. SPY, no, just hit an all-time high literally yesterday, right? 503. So, I mean, I'm not shorting that. Apple has a little bit of a better look, right? These lower highs, but super strong off this level. So honestly would want to see Apple below 180, to be honest with you. But there could be opportunities in there, maybe. Dow, been strong, but choppy, but it's been strong. AMD, you got lower highs here, certainly, and you still have higher lows. So you kind of have a wedge setting up, right? You got this, and then you can kind of draw this, which we seem to be at the bottom of that. If we break under, 165 today, that could be actually a decent opportunity for a downside trade if we're having a nice push down and we get momentum. And again, we kind of have you kind of have established a downtrend the past really since end of January. So it's almost been a month, 3-4 weeks of trending to the downside. That's good. That's a good sign. So if you're looking for a short, if I'm looking for a short, that would be a decent spot maybe to look. Meta, no. I mean, yes, massive gap to fill, could easily come back down and fill this very nicely, but it's been very, very strong. So after yesterday, I'm not really interested in that right now. So we'll see. Good sell-off for now. That's the thing. That is the thing. You really got to let this play out and see, does it hold? And that's kind of the key, because 10 years up to 4.26, it popped to 4.3 almost, just shy of that level here. And we were talking, I think I had this line drawn in, so I mean, we must have been talking about it at one of the recent streams. This is kind of your spot, like we were saying, right above 4.2, and it popped that so far today. Now, again, does it hold up? Does it hold? We've seen this happen before where, initially the news seems to be, oh man, it's bullish, bearish, it's yada, yada, whatever. And then the entire day, the initial reaction is this, and then the rest of the day we do the opposite. And by the end of the day, it's like, holy shit, massive reversal, blah, blah, blah. So everything could change in a hurry by the end of today. So that's why you don't really need to there's no reason to get too caught up in that, because especially from a momentum perspective, right? We've been trending up. We've been very, very strong, right? So yes, if the top is in, or we have a nice pullback of 5, 6, 8, 10%, right, in the S&P, and you nail the short from here to there, you could do great, right? But if we had a fake out, or if this is just kind of a blip in the road and we start sucking right back to the upside and squeezing right back out, because we've been very, very strong, you get screwed. So it's like, I like to be patient and wait for it. And once you start seeing people once it's clear that, we're getting nice downside momentum, like, okay, then you have the odds are more likely in your favor than trying to, say, oh, top's in, let's go. That gas will be free soon. Jeez. How is it doing? Oh man, that's insane. That is nuts on that gas. That is very nuts. Is there a bigger story there? I really wonder. How's oil looking? No, oil's bounced back up nicely. They're not really playing the same way. How's gold and silver? Gold looks pretty. Now gold's starting to break down a bit. Silver has been, I'm assuming, weak. No, silver's kind of holding that same area of support. All right, I'll pull up futures on the S&P to see how this goes for the first few minutes of the day. So VWAP is kind of annoying. I don't know if I really, honestly, I'm thinking about getting rid of VWAP on my charts. I only have it on the 5-minute charts, but I'm considering just getting rid of it because I don't really use it anymore either. But it's a guide. I know a lot of people look at it, so because a lot of people look at it, I use it as a guide to see how things are, holding up, strong, weak, whatever, relatively speaking. But we take out the lows. That could be, good for downside because you kind of have a little bit of like a consolidation here. So a break that would be like probably your next leg down. The kind of good thing for the short side was that this initial move came down and we stayed weak, right after it. We didn't just kind of snap back and then bounce. Like, no, we stayed very weak on that candle after that first drop candle. So, odds would probably be that we are going to be down. We're heading down today, but you never know. So we're watching that one closely here. But so far, that's the S&P. Let's pull up the NASDAQ. That dipped to lows and is getting sucked right back up there so far off the open. The Dow, I'll pull up the S&P. We'll go to the S&P for now. Yeah, we do need a dump. This would be good. I think it would be good if we get a nice pullback week or two, I think it would be pretty good to reset things if we are going to ultimately go higher, or if the market's going to stay strong, right? That you kind of need those gut checks. And also, let me see what fear and greed looks like. Fear and greed falling back to greed. We'll see if this can really fall back a decent amount if today is, or if this is more sustained of a pullback. Because you saw strength and breadth start to look like they were trying to curl up a little bit, because that was helpful, or that was because the Russell starts showing really good strength the past like 3 days. That's not super surprising, I guess. What did sentiment was? I forget. Sentiment was very, very bullish, I believe, last week. Yeah, 49% bullish last week, as of last week, and it's stayed pretty high. It's been up here for a while. 22 bearish, so a lot. I mean, the lowest bearishness we've seen in a while. Pretty much tied for the highest bulls. So sentiment was certainly bullish, and we'll see what happens. It'd be funny though if we just end up if it ended up just kind of saying, whatever, on the whole day we kind of just grind it back. Like if that happens, dude, oh man, how crazy would that be? So Bitcoin, let's pull up Bitcoin's chart here. It says it's up 1.8, but that's not right, because it's not up from, well, I guess it depends on where it closed, where you would call yesterday's close, but that was the chart. It looks very, very nice push here, and hit over 50K, and then now it's potentially in a little pullback mode. We'll see how long that lasts, if it lasts. On that, we'll talk about oil for a second, but that bounced off the trend line, and it's getting back up there. But yeah, here's this above me right here is my risk on list. I mean, you're talking about down 7%, ARC's down about 5%. Shopify had earnings, they're down 10 or 11, but you have some really big numbers here on the downside. So that's kind of telling. ARC, well, I mean, we'll see. Just kind of back testing the breakdown here, but it broke out of this, had a very nice push. The Russell had a very nice couple of days for whatever reason, right? Because the 10-year hadn't been weak, right? So just for whatever reason, it went up, and now it came back off this pretty big gap down off of the CPI. So we'll see if it holds. Is really what it is. See if it holds and we start selling back off, then I'd be watching ARC for a push under 45. Could be now the next leg down. But until then, it's kind of in, not to say no man's land, but I wouldn't be necessarily bearish on it until it breaks 45, Because I just think bigger picture on some of these things. Walmart's up. That's one of the only green spots I see. Oh, look at that. Oh, because they have a split coming up, right? They got a 3-for-1. Oh, they also have earnings coming up as well, so I would not be interested in that. But either way, you still have a pretty strong stock here, right? On this little bull flag, breaking out, or at least tried to for a second. No more green on my large cap list. Now, of course, this is just my list that I look at. I did have one interesting stock to the downside to watch, which was GIS, General Mills. But it is not weak. It's actually up today, believe it or not. The reason why is because in the bigger time frames, this is pretty darn weak, and you've got a really big, you can say a bear flag or whatever, just big consolidation after a big move down, really. So, and we were putting pressure on those lows a couple of days ago. We've bounced up off of them. Earnings isn't for a while, about a month out, or over a month till earnings. So I was thinking maybe we'd see if we got volume, maybe we see this thing fluttering off down towards 60, maybe into the upper 50s. But it might not be a good play, because it probably won't. Well, who knows? It might not move very well if you had more time. If I wasn't more interested in the timing of it, could be better idea. But And then Goldman Sachs was one that I was looking at for. I got an alert on this yesterday. I did not take the trade, but I did get alerted of this, and I saw that, and I was like, oh, I'll check it out when I get back. So now that I'm back, what do I see? Well, it did technically on higher volume break the consolidation level, and it closed above it, which is good. It's a good sign. The problem is that you would have had to get in that before knowing that we had a CPI the next day, and it's like I don't know if I would want to be in that before a CPI, So it's a little bit of context there to take into consideration. But if it stays in this consolidation, the market doesn't dump, this may end up going for it eventually, and it still could be a trade that I'll take. But then now that CPI is out of the way, if we get back over 390, on high volume, I would actually consider that trade. But for now, it is not, so we'll leave it alone. And we'll jump back to the main list here. Let's see how we're doing. Yeah, looks like we're trying to come back up a little bit. So SPY rounding a little bit. That was this, we're only 7 minutes in, but this is the first 5-minute candle of the open where the volume started coming in. So we had a little bit of a wick down that got bought back up. And yeah, so we'll see if that holds. If this ends up kind of rounding up and just trending up throughout the day and we never actually go to those lows again, that would be pretty impressive of a move. And I honestly, not that like, that's something that I would trade necessarily, but probably bodes well for the rest of the week, I would think, to the upside. I mean, what's going on, Flip? Russell. Yeah, the Russell's down a lot, relatively speaking. It's kind of what we were looking before. Like, it's kind of crazy. Well, it's coming back a little bit, but the move that it had, right, from on the daily time frames, from 190 within just like a week or not, like a week and a half, it went from 190 all the way up to 203.50. And then from 203.50, it's down to 196 this morning, or under 196 this morning. Now it's come back a little bit. But yeah, it was a pretty strong bounce. That's for sure. So the biggest key to me, I think, would be really the way that this day kind of closes out, because you have the potential, right? Okay, like you've got them. Here we go. Like, pretty nice sell off. How much does the market really care about this CPI? Does it matter that much? We're going to find out probably by the end of today, or by at least at some point this week. Because if we end up just kind of coming back up from that, and then it's like, doesn't matter. We're in that point where it's like, good news is good news, bad news is good news, any news is good news. And the market doesn't really care if we ended up staying strong. Initial reactions are one thing, but we'll see how the follow through sets up. So there's the 10-year. Quick dip down it had back in, I guess, the beginning of the month. And then that got sucked right back up. Technically made a higher low, and it's pushed up and made a higher high relative to this 4.2 level we've been seeing. So not unfortunately, but because I really don't care, but and I will post all the trade recaps when I have them, but I highly doubt that this is going to be a trading day. Highly doubt it, because we are not, as of now, we're not getting a ton of downside momentum. We'll see. I'll go to my trade list and see how these charts look. So weakest on this list, you have the Russell. But is that a shortable chart? No. Microsoft will be number 2 against the next weakest, but is that shortable? No. I mean, I don't have a setup there. There's no setup for me there. AMD, we were saying, could be good. Under, was that like 165? And guess what it has done? It literally came under 165 for a couple of seconds this morning, and it's now sucked it right back up and is bounced off the level. So I would need to see this thing kind of roll back over and put under pressure on that level for me to maybe take the short there. So that's what I would need, and we don't seem to be there or close to that right now. Amazon, no. Google, no. And we went through this list already. Like, I'm not interested in shorting these things right now. So the AMD, and then it was Tesla. But now Tesla, look at this chart, is not one of the weakest stocks. It's not even in the top 5 weakest on my list today, which is generally not the best of signs. If I'm going to short, I want the stock to be within the top 5, or really the top 2 or 3 weakest on my list on the day, which means, okay, I'm playing with weakness, with relative weakness here. Gives me better odds. If it's not there, it's and it's not really breaking below 180, which is kind of the level that I want to see it underneath for a short. So that's not really there. So combine all that, and it's like, And with the trend that we've had that has been generally pretty strong the past couple of weeks, a couple of days of lower highs. Now we're talking, okay, great. Like AMD is an example. Like we have a couple lower highs, and we kind of have a key level here, right? We have a level that we've bounced off of multiple times. So breaking underneath that, and you got the volume profile setting up where there's not much below this, down towards 150. So yes, that is certainly a downside trade that could be taken, but again, it just needs to get there and needs to set up, which it's close. It could do it. If we stay weak this week, I would say this could be one to watch, but it's still got to get under 165. to get me a setup maybe. So, but the other trades, the longs were all closed out yesterday. So we have that. We are up in a, well, we're up, back to a fairly okay number for the month of February, since we're like halfway there. It is a leap year though. It is a leap year. But my month of February, there will if there's swings, there's swings. I'll take them. I will not be day trading the last like a week or so because I'll be traveling. Last week of February, first week of March, I will not be. I will not be here. So there will not be lives. Maybe I'll throw one in like on a Friday or something like that when I'm home, but I'll be in the middle of 2 trips, so I will not be around for that. But yes, if there are trades, there'll be swings, and I'll do trade recaps when I have them on those trades. But we'll see how that goes. So February trading may start to slow down a bit in terms of the volume of trades that I take. And not really because of setups necessarily, but also if we don't have setups, then yeah, it's not going to happen anyway. Wouldn't mind. Yeah, we certainly could, and I would think it's a good thing if we got a little reset. Let's look at the S&P's daily chart. And really, it's more than just this. Like, if today is a red day and we start kind of going back up, that wouldn't really be much, right? We're kind of talking maybe something like this. You know what I mean? It'll be more of a reset, where we had from end of December through first couple of days of January, a couple decent days of downside, and then we eventually kind of found our way and started to push back up. Like, that would be a better look, and that pullback was approximately 2.8%, which really isn't that much. It's not that much at all. So maybe like a 3 to 5% pullback would be cool, would be good. It'd be really nice if we got something like that, because then it would probably sucker in people like, oh shit, the top's in. I think it's also seasonally, I was seeing this is not the strongest of times of year. Let me see if I can double check that and find that. If I can get that chart up, I'll pull it up. But I usually go over to on Twitter, Ryan Detrick has posted a bunch of charts like that. Now, he's been pretty bullish, or his company, I don't know, whoever he's associated with, they've been kind of bullish the past year or so, and they've done very, very well. But I don't like to get too caught up in like people's narratives, but I like when he posts data. I like when they do that. Yeah, here it is. He just posted it again. Fourth year. Oh no, this is just kind of like random. Fourth year of a new president tends to see the most gains later. So if that matters, we're kind of here, right? We're kind of peaked out, which so far it's actually kind of looked pretty good correlation wise. We kind of peaked out right here, and then we kind of have this choppy period and weak period actually into March. And then we start to, as we finish out March, it's kind of like a time where where seasonality, or at least our history tells us we tend to trend higher. So this is like the weakest time of this data. Now, it only includes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years of data, which is not a ton. So it's not like, oh, it's seasonality every time this time of year. No, it's just really during a president's cycle. So take it as you see. But we're kind of lining up with that if we see a weakness for the next month or so. SMCI. Let's take a look at some of those things. Yeah, let's. The thing that I think the lowest, and the volume is still, by the way, is still so strong. Look at SMCI. That's insane. I don't know. Is SMCI, the volume has seemingly just come in since a month ago. So I don't know much about them compared to NVIDIA. Are they, what are they compared to NVIDIA? Are they substantially, a worse or less superior company, or are they they have the potential to be, kind of like that? I don't know. I have no idea. But either way, this thing, even just a year ago, you're talking about a sub $100 stock. That's now 7x from there, 8x. Jeez. But yeah, this maybe is a better candidate, but when the music stops, which inevitably it will at some point, maybe it goes, NVIDIA goes to 1,000 plus and then it stops. Who knows? whenever the music stops, the better trades to be in on the short side will be on the stuff that is not like, if Nvidia is the leader and we think of them as like the lead dog, like if you think back to like GameStop and AM, like GameStop was the leader back during that whole squeeze cycle. So if you jump over to GameStop's chart, now the chart looks like shit probably now, yeah. But if you look back now, it still has not given back all of the gains that it had from the initial, crazy moves. It still has not, which is nuts. So, but it's been a slow, painful death if you've been holding it. If you're in like AMC, which was kind of like a secondary play, kind of more of just a literal meme and a squeeze, whatever. Now they've done some stuff, they've offerings, and I'm sure they've just crushed shareholder value as it is. But look at this. This is not only giving it all back, it gave it all back and more from where it squeezed out. So my thought is what you'd want to look for on the short side would be maybe something like this. Maybe it's the secondary names that are really only running up because of NVIDIA. And it's those ones that when the backside establishes, which may not be for 6 months or a year, I don't know. When we establish backside, could be the better payers on the short side and the better risk rewards, or the easier money, I say. But once we've established backside and we've got lower highs and we know areas you can risk off of, then these are probably the plays that make more sense to be shorting than trying to short NVIDIA or something like that, because this is where your lower hanging fruit's going to be. It's not going to be in the lead dog. It'll probably be in the other guys. Not that NVIDIA can't be, but if NVIDIA goes to 1,000, then it sells off for 3 years and it drops back to 500, and then from there it establishes a base and then starts to kind of push higher if it is a legit, if the company is holding up and they're doing well, whatever, and then it trends from there little by little, cool, right? You're not going to get destroyed necessarily on it, but there will be other stocks, maybe I don't want to say SMCI, but maybe similar to that go on crazy runs and give back 80-90% of their gains, if not, or drop 80-90% from their highs. Still could be higher than where they were like a year ago, but provide you really good backside trades and in a sense less risk. Okay. Just cleaning up the tabs here. BMR. Let's pull up that one really quick because I'm curious. That's insane. That is nuts. And that's more like a small cap, right? That's just getting squeezed out. Right? Market cap's only 128 million. Because SMCI, what's their market cap? SMCI's market cap, it says 42.65 billion, and Nvidia's market cap is 1.76 trillion. Trillion with a T. That's crazy. Well, I know it wasn't. Well, it wasn't a trillion until this year, I guess, based on how much it's moved. Way better than, yes. So, and I'm not really sure how I would go about that either. Like, I'm not really sure if that's something that I would partake in really, but because we're not there yet, as in like we don't really have a bear market necessarily to start saying that. But I think that's a strategy to keep in mind. I'm not sure how I would go about doing it, but if it's options, or I haven't traded options in a long time, or if it's leaps, or if it's spreads or something like that, debit spreads, credit spreads, something along those lines, maybe is a better way to play the downside of it. Because if you play like a debit spread or even a credit spread, and play that, you don't maybe necessarily care how low it goes, how much it drops. You're essentially just you can make a bet where, hey, as long as it doesn't get back above this level, and it could stay flat or it could trend down, I'm going to cash in. That's kind of maybe a better way to play that. Give it time or whatever. That's kind of how I view it on the spread side. Although, right, it's not the same way it's more, and if you do that, I'd say you'd want to go at time. You'd probably want to buy time on them once you start to establish backside. But then again, at the same time, you don't really know, because a lot of the decay really comes towards the end. So Yeah, realistically, you just want to short the stock and take profits on the extensions to the downside and the breakdowns, and reconsider maybe if it pops back up and consolidates for a bit. So there's a new low day on the S&P. I'm looking at, I don't know what I'm looking at, the micro E-mini futures. I don't know, just what I have on my chart, but essentially it's just looking at the S&P. Pull up SPY. We can go to SPY and see what that looks like too, I guess. 493. So we were over 500. We're down like $10 from yesterday's highs, pretty much. Yesterday's highs were 503.40 something, and we're down around $4. Yeah, we're down about $10 from yesterday's highs. Just shy of that. We're closing in on it though, on SPY. So that would technically be like, if you wanted to call this a consolidation. We're starting to break that consolidation right now. Break the lows. Shorting SOXS, yeah, that would be a good idea. Now that I think about it, yeah, just playing the semis as a whole, playing the backside of that with that. Or to be honest, what you'd want to probably do is you could buy shares, or if you were in the option world, play shorts or puts on SOXL. Because you got the decay, and stuff with that as well. So it's a little bit nicer if you're going the right way. That's what I would probably do. So we undercut lows for a second here. We'll see if that holds up. Let me go back to that. Where's AMD? AMD, no, it's still not there. We're saying like I want to see it under 165 to maybe consider a short for a day trade. And it's just, despite the market being at lows right now, it dipped at the first 5 minutes and it's bounced from there. It has not provided anything. The only way that I would be looking right now really for today would be like, we consolidate here, like we have whatever happens here, we consolidate, and then we get like that secondary push maybe in like an hour or two, and we start breaking consolidations and we get some clean kind of looking bear flags almost, clean consolidation breaks, but they'd have to be clean. If they're not clean, I don't want them. Again, because of just how we have been, how resilient the market's been, how strong it's been, it's just not worth, in my opinion, trying to fight that until we have more clarity of lower highs and we start breaking down more lower lows and all that stuff. Until that, then it's like, is it worth, trying to force something? No, absolutely not. Especially after having gains, like when you have, when you just got some gains on the past couple of days, like on some trades, like, you want to keep those, and ideally you don't want to give them right back. And ideally you'd want to compound those with your next couple of trades being good trades and waiting for good setups versus, trading some random stuff that, you're like, give it a shot. Like, no, there's no giving it a shot. Laura says, I'm about to sell all my stocks for Bitcoin. The problem, my brother was actually just telling me about that. He was saying this morning, he's like, because he saw a video on Instagram and he sent it to me. He's like, yeah, like, is it time to get into crypto right now? My whole thought on that is simple. Like, it could be like, we do look quite strong and very good on Bitcoin. Don't get me wrong. But, like, maybe that's just my view. From like an investing perspective, if you were not buying Bitcoin, not saying you had to buy the lows when it was down at $15,000, $16,000 back in 2022, not saying that you were doing that, but even that, right? If you were buying it, even just, what is this, back in September of last year, when it was down in the, 25, 26, 27 range, if you were dollar cost averaging there, or just in general, if you were buying it under 30K, cool, you're feeling good, obviously right now. But if you didn't want to buy it then, why are you going to buy it now? If we keep going and we take out the highs of 2021's rally and bull market, if we take those highs out, you'll look back and say, yeah, it was a good buy. But risk reward wise, to me, it just doesn't seem as good as for me. It's like, I will trade it to the upside if I see a trade setup that I like. My setup that I will take, yes, I will trade it to the upside as I did last week. But if I'm not going to, I hold some Bitcoin. I'm not really trading that Bitcoin at all. And I'm just going to leave it. If we go to like, 70, 80, 100K, cool. That's great. But, and really like, that's when, the buys that you had in here pay you or pay off if you want to lock some of the gains in, if you wanted to, or you want to just hold on to it, right? But my whole view too, that as I've started to just, as time has gone on, there's a time and place to have a core position and a core holding, let's say an investment in the S&P or in Bitcoin. But then there's also, something that's very volatile. S&P is not as volatile as Bitcoin. In something that's very, very volatile like Bitcoin, you kind of have to lock the gains in at some point. Because if you don't do that, then yes, you can just ride the wave. And if Bitcoin is the thing and goes to 100K, a million, right? Who cares? Like, you're going to be up. So in the grand scheme, you'll be fine. But if you are trading with larger amounts and you don't want to see the ups and downs of a portfolio, you kind of have to lock gains at some point. And whether that's 25% of your position, half of your position, whatever, if you don't realize the gains, you don't have the gains. And then you can take those realized gains, sit back on that cash, and then use that to deploy into the next bear market, because it will inevitably come again. We will have a bear market on Bitcoin again, and it will probably be down 50+% from the highs. And it's like, okay, maybe that's when you start deploying that money. But for me, there's absolutely no way in hell I would think to be going all in S&P, Bitcoin, anything in general right now. Like, we are at highs. We are at highs. Simple as that. We just hit all-time highs on the S&P yesterday. Bitcoin didn't hit all-time highs, but it hit highs of the year and the recent bull rally yesterday. And so from an investing perspective, I think the better way to invest would be to flip from a momentum strategy where you want to be in when everyone wants to be in, we're going up, let's go, to I want to be buying when it's going down. I want to be buying when no one wants to buy. People are doubting it, all that stuff. That's when you ideally want to be buying it. And that's the S&P. From an investing perspective, you're going to, it's a slower, longer term approach, but you're going to get a better bang for your buck. Versus trading, I think trading is where you can use momentum. There's a million strategies, but I think momentum for me makes most sense because I'm right or I'm wrong pretty quick, and I'm able to ride, the hype or the trend until the trend eventually dies. But I'm also not like the biggest Bitcoin guy out there. I'm not against it by any means. I just don't know enough. I haven't been super deep into crypto. I haven't like some people, get super deep into it and look at all these little coins and stuff. I just never really got into that stuff. I don't see a value in that, but you can make a lot of money in bull runs, and you can make a lot of money, I guess, shorting them too on the backside. So there's trades to be had. Don't get me wrong. Maybe I would look at that. I would maybe be interested in that stuff on the backside when we eventually, top out. Maybe it's in a year, maybe it's in 6 months, who knows when, and maybe look at shorting, probably in a year, because you probably need some time for things to set up on the downside, and looking at some swing trade shorts on different cryptos and stuff that are, essentially just BS coins. That could be maybe of interest to me, but that's just playing momentum, and that's not really interesting to anyone right now. So let's see what the S&P is doing here. At lows, pretty much. NASDAQ. Well, funny enough, the NASDAQ actually the S&P looks a lot weaker than the NASDAQ. NASDAQ hit lows on the first 5 minutes, and it's actually bounced since then. That's funny. Yeah, Tesla's strong off the lows, off the open. Everything that I have on my list are actually pretty strong off the open. They look kind of like the NASDAQ chart. All the stocks I like to look at. ARK's down 4.5%. Affirm's down 10%. That's hilarious. I mean, these stocks are so good for vol. Like, these are just great for big moves up and down. This risk on list that I've got here is pretty good. Pretty good. But yeah, with that said, let me go back to my 10 years. Staying strong, yeah. Goldman Sachs would need to probably, it needs to get above 390 and close there on high volume for me to be interested in that again. And then GIS could be good. This is my thought of maybe a short play, but it would be a swing. It would be a couple of week hold, I would think. And it would be sell before the earnings, which is out in on March 20th. It's just you have a very strong downtrend, right? That's leading the way, A. You've got lower highs here, B. You've got some lower lows, C. So you have a downtrend in the downtrend, and you have a consolidation here that we are putting pressure on. If we close on high volume and we push down towards those lows, it could be a good trade to the downside. The only problem is that it is General Mills. It's not a freaking Tesla, Nvidia, Apple. It's not going to move at all very fast. And so you'd have to kind of just let it chill and give it time. So is it really worth it to me? Probably not, because there's probably better bang for my buck elsewhere with things that'll move a little bit faster and probably cause less headaches. Not even less headaches, but it'll just be a little bit of a cleaner downside. But I have it there because I looked at it. Chart I think could be good for downside, but yeah, I'm not in love with it. And if I have those thoughts and feelings right now, it's usually a good sign to not even touch it. Any sectors looking decent? XLV looks okay. It's not as weak. Real estate's getting nailed, obviously with the 10-year going up again. KRE. Yeah, and these sectors don't look great either, dude. XPI. Yeah, we're just gonna wait. On GIS, you're saying on Head and Shoulders? Yeah, kind of. No, it doesn't look. I see this chart and I would say I would not long this chart. Like no way in hell would I long it. It just might not be a. It might just take a while. Like that's my only thing. It might take a while to play out. So, alrighty. Well, unfortunately, kind of a boring day. I'm gonna, now I have a few minutes, I'm going to do the trade recaps right after this, and I'll post those up there'll be at least one posted today, and there'll be probably at least, well, they'll all be up eventually, but I'm going to post one today and probably the next one the next day, because I don't want to have them, I don't want to the number will be very large if I post them together, like how much money it made, and I don't want to skew that and make it seem like it's so crazy. I would rather put them side by side and put them individual trades so the numbers are not as large, and so they look a little more reasonable. That's what I'm going to do. So with that said, I'm going to wrap up. We'll be back tomorrow. I will do a power hour stream tomorrow. So we'll be back, and well, actually, shit. Wait, what's tomorrow? Wednesday? Yeah, I'll be back. We'll be back for a power hour stream tomorrow, and I hope to see you then. Peace. Have a great rest of your Tuesday.